Hi, I'm Stock Investor Davis. Welcome to the channel and please subscribe. We're going to take a deeper look at NVDA. The last time they reported earnings was on November 27th for its period ending October 31st, and they're soon to report their next period earnings on February 21st for its period ending January 31st, 2024. So we're going to just look at their current earnings per share. We'll look at what the guidance has been for the company for these upcoming results. Then we'll do a little comparison of what's going on now compared to what it will be potentially. And then we'll close with the technical analysis for this company. So to start off, we have its current earnings per share on the screen, which is at $7.58. In the right-hand corner, the top right corner, we have its earnings per share by quarter, which will add up to that $7.58. Doing some digging into the company, and primarily focusing on its past 4 years, this company seems to trade at a price to earnings ratio of between 50 and 102 with an average of about 76. So right now it's actually trading at about 95 price to earnings ratio. So it is in that fair value range, clearly on the upper half. But let's actually look at what guidance is for its next quarter. So here we have at the top left its guidance for its upcoming quarter, which again, that'll be released very soon in about a week or two. So it's a little small, but just to kind of recap, they're projecting revenue of $20 billion. They have gross margins. They're expecting about 75%. Operating expenses of $3.17 billion in terms of GAAP. Income or other income and expenses of approximately $200 million and a tax rate of about 15%. So if we merge all those guidance principles, we end up with a trailing 12 months of sales projected at about $58.8 billion, which will trickle down to net income of $27.3 billion. With their current shares outstanding of about 2.5 billion shares, we get an earnings per share of $10.94. So if we incorporate that price to earnings ratio of between 50 and 102 based on our research, we're then left with a fair value range going into the next quarter between $547 and $1,116, leaving the current price of $721, trading at a PE ratio of about 66. Still within that fair value range, but now it's clearly favoring the buyer side, and probably something we want to look into picking up. Here we just have a comparison of where it stands right now, which is at the top, and then what we're expecting based on the guidance here on the bottom for its upcoming next quarter. Wrapping up with its technical chart, we have here, I added some green boxes to indicate price points where I'm interested in picking this one up, and then the red boxes are indicating price points where it's probably better to take profits. So I added the price to earnings ratio boxes. Those are the ones with the stars next to it. Those are what the stock price seems to be focusing on most. I did include the price to sales ratio, but because the stock it's not lining up with that type of ratio. So again, we'll just focus on the price to earnings. Right now, it's within that fair value range. We can see it's actually getting very close to its ceiling in terms of its fair value range. But then when we look into next quarter, we can see that range definitely shifts upward and the ceiling becomes a lot higher. And that kind of was pointed out earlier, how right now the cap for the fair value range is close to like 800. Well, it's about to go to about 1100. So all seems well, really, in terms of an investor. And then I just want to add that there's this uptrend that's currently slicing across these two ratios. So right now, following that same uptrend, if it continues, it's actually nearing the top of that fair value range, but it's still within the level. Going into next quarter, again, it's still within that fair value range, but it actually seems like it's more so on the lower half. So we might see a jump at some point. I think a lot will depend on the guidance that management will give us for its first quarter and possibly its entire 2025 year. But right now, based on what we know, this actually seems like a pretty good pickup going into its next quarter. So let me know your thoughts below. Thank you for watching, and remember to subscribe.